Today, we are doing a quick educational walkthrough on how to review a Fidelity Flex SMA, using one account as an example. Now, the goal here is to show you where to look, what matters, and how to think about performance and tax features. So this is about understanding the process, not setting expectations. So here we start on page 1. In the upper corner, you'll see your ending account value. In this example, the account ended the year at $1.27 million. Page 1 is just a summary. The real detail lives on pages 2 and 3. So that's where we'll focus. On page 2, you can see how the account was funded. This account started with roughly $1 million, about $182,000 in cash and $817,000 transferred in. And that was securities, primarily ETFs and mutual funds. So after fees and deductible marginal interest, the account generated about $289,000 of growth, ending at $1.27 million. Importantly, this balance is net of fees. So what you see here is what was actually earned in the account. When evaluating performance, always start from the funding date, not from January 1st. This account was funded on March 12th. So performance is measured from March 12th through year end. Over the same period, government bonds, you can see they returned about 5%. The Russell 2000, great year, returned 24%. International stocks, 21%. The Russell 500, 24% return. Great returns, but over the same time frame, the Flex SMA returned approximately 27% net of fees. So that's how you want to evaluate the performance of your portfolio. So now let's go to the page 3. This is where you'll see real capital gains and losses. In a full year, a basic Flex SMA strategy typically targets about 31% tax loss harvesting. In this example, the account generated approximately $210,000 of short-term capital losses, or about 21% of the portfolio value. Because the account was active for roughly 3/4 of the year, this level of harvesting is consistent with our expectations. Now, these losses, they're very flexible. They can be used to offset gains inside this account, to offset gains elsewhere on your tax return, well, such as selling a business, selling real estate, selling concentrated stock positions, or even selling collectibles. Or if you don't need the losses this year, they can be carried forward indefinitely on your Schedule D. If an investor wants to increase harvesting, the strategy can be adjusted to higher intensity versions, such as the Flex 250 or the Flex 300, where annual harvesting can reach 70 to 90% in the right market conditions. This is tax deferral, not tax elimination, but deferral is powerful. It gives you control over when these gains are recognized. For example, if you want to wait until you're in a lower tax bracket to defer these gains, or you want to pick up the gains over time so that you stay out of the highest capital gains tax brackets, or you want to wait until a year when you have high deductions. Maybe you have high medical expenses coming up in your old age, and you want to wait till you have those high losses to offset your gains. Or you want to transfer those gains or those securities to somebody in a lower tax bracket, one of your beneficiaries. That would save you on taxes. Or maybe just hold on to the gains until you die, and then with the step up in basis rules, you never have to pay the capital gains tax. It's powerful. It gives you control over when and how those gains are eventually recognized. Another key feature of the Flex SMA is customization. And so you have this important decision on which index you want the strategy built on. You can choose the Russell 1000, the Russell 3000, the MSCI World Index. You can fund the account with cash. You can fund it with ETFs. You can fund it with mutual funds. You can fund it with individual stocks. And the nice thing is it's fully liquid, and withdrawals can be managed in a tax-aware way. You'll also see highly marketable securities like Apple, Microsoft, Nvidia, and others, which really lets you support the flexibility and liquidity you're looking for. So, when reviewing your own Flex SMA statement, page 1 for ending value, page 2 for performance net of fee, page 3 for tax loss harvesting, and page 2 again for customization. The goal here isn't just returns, it's growth, tax efficiency, and flexibility all working together. So, if you want more education on anything we have discussed here, please contact me to learn more.